when it comes down to, you said you don't invest in the stock market. I do. I more so speculate than I invest. And obviously, I'm in uranium. I told you off mic as well. And I was just wondering what your opinion might be on the prices of some of these energy sources, that being, oil and uranium. And don't you think that we've already seen the largest moves in oil and in uranium? Like, do you think that uranium can repeat the move that it's done since 2016, which is over 220% move that it's done? And can oil repeat the move that it's done since 2020, like from these levels that we're at right now?
From here, we're probably more bullish on uranium than oil. And I should disclose that our largest position in our speculative accounts is the Sprott Physical Uranium Trust. We own no uranium gold miners. When we become bullish on a commodity, we prefer to express our views through the commodity itself, as opposed to the companies, the miners, or the explorers, or the midstreams, or just because those are easier for us to model, and you don't have management risk, and you don't have, capital risk, and the manner in which, the executives behave is irrelevant. And so we have a relatively large position in Sprott Physical Uranium Trust, which we've had for a very long time and is doing quite well. But the reason why we're probably more bullish on the price of uranium from here versus oil in the $100 plus barrel range is, as a percent of the cost of operating a nuclear power plant, the price of uranium is still effectively irrelevant. And so it has a lot more room to run before the consumers of that product would really feel the pain, i.e., ultimately the people who procure electricity from nuclear power plants. And on top of that, it's becoming very clear that two things are emerging. One is the US is going to make a move, we believe, especially if the war in Ukraine drags on, to limit exports from Russia in an overt attempt to spike the price of uranium to induce domestic supply. I think the political leaders in the US understand that even at $60 a pound uranium, this is insufficient to justify the restarting of shuttered mines or the development of new ones. And the US Department of Defense in particular is keenly interested in recapitalizing and reconstitutionalizing a domestic uranium supply, or at least the uranium supply in the hands of allies, the Five Eyes states and so on. And so we're seeing a move from the Biden administration via Congress to restrict the supply and restrict exports from Russia. And they understand, I think, not only do they understand that the price of uranium needs to go higher, they want it to for domestic national security reasons. And because they know that miners can't, pay $80 a pound to profitably sell uranium at $60 a pound and make a living doing that. And so the second thing, of course, is the Sprott Physical Uranium Trust and the consummation of the merger with URNM, and then also eventually, hopefully, seems to be much delayed, the New York Stock Exchange listing of the Sprott Physical Uranium Trust will open up the number of investors and the types of investors who could help signal to the market that more uranium is needed by investing into physical uranium itself. And we believe that is healthy. And we believe that the more that Sprott and copycat funds can create efficient ways for the market to signal to miners that there is a future here and that you can hedge your future production. Volume goes up, futures are developed, markets become more efficient, which brings down the net costs and the hedging. It brings up the hedging capabilities of these miners. So we do believe there's a lot of secular tailwinds to uranium. And since nuclear is the highest energy return on energy invested potential source of future power, we believe that is also a tailwind. Oil and gas, on the other hand, is so hyperpolitical, and we still think there's lots of room to run. But from $100, if the price of oil doubles, the economy collapses. Whereas if the price of uranium doubles, a few utilities have to pay a little bit more for their fuel. These are vastly different consequences of the doubles. So to us, we're more bullish on uranium, and we have a far larger position on uranium. But that's just us.
Mm-hmm. It's I think that makes a lot of sense because the price has to be allowed to go as high too, not by any conspiracy or whatever, just by market dynamics, as you mentioned. If the price of oil doubles, the economy collapses. You did mention a lot of catalysts, though, that are causing tailwinds for uranium, and I see them mentioned all over the place. And I'm just wondering, if I were to make like an infographic or a mind map or whatever, which of those catalysts should I put the highest up? Like which one of those has the highest stakes? Like if you say like let's give an example, the New York Stock Exchange listing of the Sprott fund. Like if that doesn't happen, the uranium thesis doesn't work. Or like if that happens sooner, the uranium thesis becomes twice as good. Which of those catalysts do you think is that catalyst?
The most prominent catalyst is an export ban, or import ban from Russia, or if Russia preemptively does an export ban of uranium. I think that is the most obvious catalyst to come. Or upheaval in Kazakhstan. There's a lot of geopolitical risk to the uranium trade that is bullish if it happens. Now, that doesn't mean that we're hoping for it, or that we would cheer it if it happens. But if you're a pragmatic investor looking at catalysts, I would say by far the war in Russia-Ukraine is by far the biggest potential positive and negative catalyst. If the Russians accidentally drop a bomb on a Ukrainian nuclear power facility and we get a Fukushima type meltdown, then that would be very destructive to the uranium thesis and could cause, since it is a very crowded trade, a lot of people to lose a lot of money, us included. But so far, what we've seen is you can have a literal battle in front of a nuclear power plant, and it does just fine. These things are pretty robust and pretty well designed, and so by and large, but the biggest risk to the trade is, of course, another nuclear accident that spooks people. We would put that probability at very low. But so to us, the biggest catalyst is ongoing altercations between Russia and Ukraine lead to ever increasing sanctions. The Russians seem to be doing a decent job of circumventing those sanctions if the value of the ruble is your scorecard. But they could choose to turn off the exports of finished uranium, or the U.S. could choose to ban their imports. Either of those would be the most significant catalyst. In our view, fundamentally, having said that, one thing we've learned in the markets is the ability for an entity to accept flows is the number one determinant of price. If you just look at some of the silliness in GameStop and AMC. So if the Reddit crowd got a hold of a New York Stock Exchange listed Sprott physical uranium trust, who knows where they could bring it? But we don't invest with those types of catalysts being needed for us to realize a positive return.
Let me tell you what, the next time when an AMC buys a uranium miner might be a good time to get out. And you probably write a good piece on that too, and people get pissed at you. So
that's okay.
That's the point, right?
One thing about a content creator, if you're not willing to piss a few people off, you're probably not doing a good job.
Right. Yeah. Right. I like that. And I probably wouldn't invite you onto the channel either if you don't. So it's that's an interesting topic. But even if I hadn't invested as much money as I have in uranium, it would have been an interesting topic to me. And I like comparing it to historical happenings. But everything that you said is sort of new. Like all the catalysts that you just summed up for uranium, they're different than what we had during the bull run of the 70s or the bull run of 2007, the most famous one. So is it different? The four most dangerous words in the markets at this time is different. Is it?
I don't think so. I just think, and look, the price of uranium is, like you said, has doubled. It's gone on an incredible run. A lot of the junior miners have been up multiples of that. It's been a long consolidation here in this sort of $50 to $60 range, and we'll see if this is ready for the next breakout. If one of those catalysts come true, I mean, ultimately, commodity cycles are what they are. Like for example, I would never say that uranium is going to go straight up and never come down. The only question is how high and when. And if it's already as high as it's been and when is in the past, then we're wrong. And then, if we're wrong, we're wrong. We'll have less money than we did when we made the trade. So these are sort of very standard times. There's nothing uniquely different. I would say the presence of spread is pretty unique, and I don't think the industry is taking it quite seriously enough yet, because they're literally sequestering tens of millions of pounds under their nose, and some of them are only have ever worked in a period of a bear market in uranium, and assume that this is an aberration. But we shall see. That's the beautiful thing about markets is there's no shortage of ways to express your views.
Okay, is there, knowing all that, is there something that could happen? And could is a dangerous word too, I realize that as I'm saying it, but is there something that can happen that can make you go all in on uranium, like mortgage your house twice and just, start speculating, maybe because you mentioned that you only leverage the physical commodity, but then mortgage your house twice and start speculating on some of the companies in the space? Like, is there something in the uranium market that can make you do that?
There's nothing in any market that would make me do that. We have firm position limits. As I said earlier, our main financial strategy is we earn money in fiat. We save money by buying real assets like land and gold and property and so on. And then when we invest, we try to invest in private enterprises that we have a deep understanding of, and that we as individuals and as a team can help use our skills, our network, and our resources to create sweat equity alpha. We find that you can create multiples of value more easily in the private market if you know what you're doing. It's not a game for everybody. We have pretty substantial experience in the private markets, as the piece we published this morning, Crouching Tiger, Hidden Problems, would make apparent. We know that world well. We know the language. We understand deal flow. We understand terms. We understand preferences. We understand valuations. And we can derive that experience as individual investors and as a team to get far better risk return. Like we know a good private deal when we see it. And so for us to spend too much time levering up and mortgaging our house on a bet in a market that we can't directly influence doesn't seem as rewarding or as lucrative or as valuable.
What do you think happens after this? Like, what do we do after this energy cycle that we're in right now? But buy a farm and go live far away from people and their BS, or what's the green chicken's plan?
Well, we're ultimately optimistic. And so our plan is to continue to build Doomberg and to be part of the discussion.